Everyone says invest for the long term, but no one tells you when to sell. Knowing when to sell, that's the hardest part. But you can learn from the masters and from the mistakes of others. I'll share 4 sell strategies which I learned from Peter Lynch along with real stock examples. I will also share my personal experience of how I missed a trigger and what it cost me so that you can learn from it. Peter, scenario 1. When the PE of a stock goes above its normal median range, then you have to be careful and might be the time to exit. The case and study here is DMart. Look at its PE and price chart over 3 years. The black line in the top chart is the median PE. When the PE went above its median range, the stock corrected in September 2024. This is also a time when the FMCG stocks were under pressure after the COVID times. Notice how when the PE went way beyond the median levels, the stock started correcting. Remember, this cannot be a sole reason for a sale. You have to dig deeper on why price correction occurs. Hear what management talks about the company outlook. Earnings are not justifying the price at these levels. Personally, this is a strategy I always follow. At the very least, I would not sip into the stock at such lofty valuations. Peter's scenario 2 is sell a cyclical stock when there is a price war or when inflation picks up. Now, Asian Paints isn't our textbook cyclical stock, but its profitability is tied to the price of crude oil. And with the new entrants like Nippon Paint, Birla Paints, and so on, competition became stiffer. And you can see the last 3 years, the sales of Asian Paints is plateaued, or in fact, it has actually reduced. And because growth slowed down, sales slowed down, the stock crashed. Peter's scenario 3 is when inventories grow faster than your sales, exit that stock. Look at Page Industries in 2023. They are licensee and distributors of jockey in India. Sales growth slowed down, but inventories piled up dramatically. I'm showing you here how to check the inventory data in Screener. See how it went up towards the end of 2022, and then in 2024, it's back to normal levels. This mismatch signaled trouble and the stock corrected. But once the inventory buildup was reduced, we saw the turnaround in price. A perfect example for this is Unitech. 2007-8, Unitech applied for telecom license, and Unitech actually is a real estate developer. You can see how the stock would have performed and what would have happened. Look at the price chart. Need I say more? This is the most painful mistake I ever made in my investment life, and it haunts me to this day. Let me tell you about Vakranji software. Went from 700 rupees before split to 9 rupees now. It looked promising initially until serious governance concerns came up. But instead of exiting, I continued to buy the dips and frantically bought the dips. The SEBI clean sheet gave me confidence, but I didn't know I was actually catching a falling knife. The learning is simple, folks. If you hear about corporate governance issues in the stock which you own, you're better off exiting them right away. What are some examples of corporate governance issues? Insider trading by the executives, investing in a business which makes no sense to you, or highly unrelated to the existing business, or investing with other corporations which have some shady past. When you hear such news, I think we are better off just exiting these stocks. I never buy a stock with the intent to sell. I buy to hold for life. And I sell stocks to only achieve my life goals. Always consider tax impacts to sell stocks. Remember, it's okay to sell losing stocks to even harvest your taxes. Can always sell a stock and re-enter again at attractive levels. I do not buy stocks based on tips or sell on tips. Nobody can give you an exhaustive list of when to sell stocks. So please be aware, friends. But remember, all these five scenarios deserve closer attention, and basis a closer look, you take informed decisions.